Imagine sitting at a dimly lit New York stock brokerage office in 1934. Benjamin Graham spreads out rows of company reports, figures dancing under the dusty lamp's glow. The market's wild swings have everyone on edge, but Graham's not chasing headlines, he's hunting for intrinsic value. What if you could find stocks priced like treasures hidden in plain sight? That's the door security analysis throws wide open, promising a way to outsmart the market forever. Graham's first big revelation flips the usual market chatter on its head. Instead of following hype, what if value hides where others don't bother to look? Let's break it down. In 1934, Graham spotlighted a company whose stock traded at $20 despite assets worth $40 per share. Investors ignored the mismatch, dazzled by flashy stories. Graham saw dollar bills backing that stock like a hidden treasure chest, teaching investors to look past the surface numbers to real, tangible worth. Think of intrinsic value like peeling an onion. You strip away speculation, market noise, and hype layers until you reach the true core. What a company's assets, earnings, and potential are genuinely worth, regardless of stock price fluctuations. Patience is the secret weapon. Graham's approach transformed investors from market gamblers into cautious detectives. By knowing intrinsic value, investors avoid panic sales and let value blooms mature. This shift builds lasting wealth, not fast riches, a lesson Buffett cherishes after reading this book multiple times. Ever heard of a strategy that's basically investing insurance? Graham's concept of margin of safety might be the most powerful idea you never knew you needed. Graham illustrated margin of safety with a simple example, buying a brick priced at 50 cents on a dollar. Even if things go south, your investment cushion protects you. It's not a gamble, it's a wager backed by cold, hard math, not hope or hype. Margin of safety is like wearing a helmet in a bike race, not because you expect a crash, but because the risk exists. It cushions against errors in calculation, unexpected market crashes, or poor management, turning investing from risky speculation into rational decision-making. When markets freak out and stocks plunge, most panic and sell, losing money. But those armed with margin of safety see opportunity. They buy bargains at steep discounts, knowing the downside is limited while the upside is massive, turning fear into an investing edge. Forget glossy brochures and CEO charisma. Security analysis drills down to what really matters, cold, hard numbers. Here's how those digits become your investing oracle. Graham warns that not all earnings are created equal. One firm might report high profits thanks to accounting tricks, while another shows steady, honest growth. He tells a story of companies inflating earnings through one-time events, teaching us to dig beyond the headline number to its true quality. Think of a company's balance sheet as a crime scene. Every asset, liability, and equity item is a clue. Graham's methodical inspection reveals whether a business stands on solid footing or teeters on hidden debts, unreported risks, or inflated asset values, helping you avoid financial traps. By mastering these number skills, you don't just guess or follow tips, you make rational, well-informed moves. Graham's approach transforms you into an investing detective who cracks the case of what's truly valuable, allowing you to invest with unshakable confidence. Remember that 1934 brokerage office, the dusty reports, and Graham's quiet confidence? That's you now equipped with a roadmap through market chaos. Security analysis isn't just theory, it's a tested way to buy treasures when others see troubles. Here's your challenge: next time you spot a headline stock tip, pause and ask, what's the real value here? Try peeling back those layers yourself. Start small, gain clarity, then let value investing reshape how you play the market. Subscribe for more book summaries like this one.